Good afternoon. Andrew Cooper here from Advice for Living Financial Planning in Diamond Creek. Just a quick update today. There's not a huge amount to report, but I just wanted to give you an update on the markets. The good news is that markets have been gradually recovering from their quite substantial drops in February. There's still neither the Australian nor the American stock markets are back to where they were in February, but they are gradually getting their way there. The problem is that there is much increased volatility. So it means like on a day-to-day basis, they can be up today, down tomorrow, that sort of thing. I've indicated in my earlier webinars that that's probably what we should expect this year. To put it in, I suppose, a really basic sort of term, what's happened is, particularly with the American share market, is that it's like a person who ate tomorrow's lunch today and is now really hungry. When it gets to tomorrow, they're really hungry, and so they're grumbling and they're really panicky. And that's really what's happened in the American share market. Basically, it ate all of this year's lunch last year, and so it's there's not a lot of returns expected, and it's very suspect in terms of anything going wrong. And of course, all the discussions between Trump and North Korea and China are just adding to that. So it's hungry, it's grumpy, and just about anything can throw it off. And of course, the old expression is that if the Americans sneeze, then the Australians get a cold. And so as a result, our market has been following that. So, I mean, the good thing is the fundamentals are fine, and so it should continue to recover. But I think you can expect there to be a lot of up and down throughout this year. It's not the year to be looking at your portfolio every day, because it'll cause you considerable grief. Just put it away. Know that it's doing its thing, and we'll have a look at it later on in the year. Another good thing is that it looks like interest rates, particularly in the US, might be increasing, and whilst for those fixed interest investments that people have, initially there could be a drop, it will mean that returns from fixed interest should gradually begin to improve. So that's a really positive thing. They're not going to be racing back to returns of 5 and 6% and that sort of stuff in any time soon, but there will gradually be a return to that fixed interest return rate. So that's good. That's really about it. There's not a lot to report on that front. I did want to just put in a personal note because of some experience I've had recently, and it's one thing to be worried all about our money, but it's another thing, of course, to be worried about our health. And I've just recently, as some of you know, been for one of those body scans for for skin cancers and that sort of stuff. And a few weeks ago, I actually had a melanoma removed from my leg, and it had been there for a while, and I hadn't really worried about it. And now, luckily, it was all fine, but it could easily not have been. So I suppose just from my experience, and certainly with what happened with Alison last year, can I just say, if you haven't been for one of those, particularly if you've got pale skin like me, then get in and see the doctor, get that skin check done, because I'll tell you what, you can have all the money in the world, if things go badly, then it won't help. So anyway, as I said, on the whole, market improving, but very volatile. Don't look at it every day. It'll make you sick, but hopefully an increase in fixed interest rates to come. So that's about it for today. Thank you for your time. Bye.